I'm excited today. We're going to be talking about the origin of forex trading. Now, just pay cool attention and follow the journey. All right, it's going to be. I promise it's going to be interesting and insightful. Okay, prior to now, people take what they have to the market and exchange it for something else. Let's say you have a goat, you exchange it for a vegetable. You have something you no longer need, you exchange it for something you need, and that is simply known as trade by barter. Okay, so as evolution continued happening, they decided to have a particular mode, means, or unit of transaction, or mode of transaction, which is the currency. The currency is a generally accepted mode of transaction where you can take this particular currency to the market and you exchange it for a service, you exchange it for a product. So you can say you are taking your naira to the market and you are using that naira to buy food, you are using it to buy a car, you are using it to buy whatever you want to buy. You are taking your pounds to the mall, you are buying whatever you want to buy. You're taking your dollar to wherever and you are exchanging it for a particular service. Alright, that is how evolution continuing happening to from the trade by barter to a particular mode of transaction, which is the currency. And this continued, and they wanted to make transactions between one country and another. Let's say between France and the US. So they wanted to do this transaction, and how is it going to happen? They decided to make this transaction with their mode of accepted currency, which is the CHF, the Swiss franc, and the USD. All right. Now you bring yours, I bring mine. We exchange for whatever we need, and trade has happened. That is basically what it is. Now, forex trading is a trade between one country and another. So you cannot do forex trading between Lagos and Enugu. You can't say you are doing forex trading between Abuja and Anambra State. These are states in one country in Nigeria. So for forex to happen, it has to be between one country and another country. Say Ghana against Nigeria, or Nigeria against Canada. All right. So you have to be able to understand the fact that for forex to happen, there first must be a particular medium of transaction that is generally accepted. All right, you bring it to the table, I bring mine to the table, you exchange it for services, and that's what forex trading is all about. So there are certain things you need to understand. First off is this: there must be a generally accepted currency from each of the countries, and secondly, for forex to happen, it must be between one or more countries. So that is basically the introduction to forex trading. It is not as difficult as you think it is. It's not as crazy or mind-boggling as you think it is. It is simply a flow of transactions, trades between one country and another. Subscribe to our page and like the post. All right, you are going to be dropping more and more contents from today, and I promise it's going to be interesting. It's going to be captivating. Also follow us on Instagram at BigFX, BIIGFX.